Good morning and welcome this morning to Trader Talks in today's market. There were the opening bells, which means that the cash market is up and running. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. I'm joined out there in the chat by my good friend Barb Armstrong once again. And she's a 20-plus year veteran of the financial markets. She has lifted herself up with the bootstraps of her life experience. And Barb is a great friend and a great educator as well. Despite the fact that she is Canadian, I still like her very much. And she's out there to help facilitate the conversation in the chat. And please help her out by asking questions along the way. If you're in the recorded version, by all means, leave us some comments in the comment section as well. Thanks to all of you for being here, whether you are in the live session or in the recorded session. It is Wednesday morning, so I get the opportunity, a rare opportunity, to step in for our good friend Kevin Horner this morning in Trader Talks webcast. I just heard my bell dinging there. It looks like a trade went off. So let's take a look at what's going on here in the market. But before we do that, a couple of quick reminders. Everything we talk about is simply for illustrative and educational purposes only. It is not a recommendation. It is not any kind of advice or any kind of endorsement of any particular security or strategy or account type or anything else. We use specific symbols. Those are illustrative examples. Remember that options carry a high level of risk. They're not suitable for all investors. Make sure that you're aware of the characteristics and risks of standardized options before considering any option strategy. We're going to be using the Thinkorswim desktop software platform today, specifically the paper money version. It is not a guarantee of future success out there in the real world. It is, however, a great learning environment. Now, the paper money platform, the paper money version of the platform, doesn't do certain things that a live trading platform would do, namely early assignment of short options and the use of studies in scans. So we're going to be using a demonstration account, and if we get into some of those scans, we'll be able to show those studies, but just be aware of those as you move your practice from paper trading to live trading. Now, past performance, no guarantee of future results. Investing involves risk, including the loss of principal. And we're going to use some technical analysis in this discussion today and recognize that technical analysis is only one way to evaluate the market. There are many, including fundamental analysis and probability analysis. All are theoretical. None of those are guarantees. Schwab doesn't, however, recommend the use of technical analysis or any one specific method as a sole means of investment research. Let's pop out to around the world grid. Several of you were with me last night in the webcast after the close, and we talked about this idea of what we might look at in that overnight time frame. So here we are Wednesday morning. There are a lot of things going on. We're still in the middle of earnings season. We still have a lot of earnings left on the table. We've got lots of upgrades and downgrades to the market, to individual components of the market. We are on the cusp, the morn of potential resolution to the government shutdown. That vote coming to this afternoon or this evening at about 5 p.m. Eastern time. And so there's a lot kind of on the books and on the board, if you will, and yet it feels as if we're still kind of waiting with bated breath for a lot of things. And I think perhaps we are. But let's take a look at around the world. So for those of you who were not in my webcast last night, after the close, immediately after the close, I talked about some of the things that we can look at. Now, I'm going to just say this really quickly. When we look at futures contracts here in this particular case, in this grid, and I will share this grid with you, like I did last night. But if we look at a futures contract in this grid, it is simply for the purposes of measuring the movement of the market, not as a tradable instrument. I just want to make sure we're clear on that. I teach a futures trading webcast on Tuesday mornings where we talk about trading those futures products. And if you want to join me for that, I would love to have you do that and join me for that. I also teach later this afternoon and trading index options webcast, and you can join me for that one as well. But let's take a look at what's going on around the globe. Let's take a look, first of all, at the SPX. So let me just line this out and tell you what we've got for those of you who are not here. We've got the S&P 500, so we've got the U.S. markets. We've got the Nikkei, which is Japanese markets. We've got the Hang Seng, which is Hong Kong. So we've got kind of the Asian markets. We've got the UK markets. This is the FTSE. We've got the German DAX. So that's European markets. Now we could also throw in there the CAC, which is the French exchange. I just like saying the CAC, but the French. So we're not going to put that in there at this point. You could put that in that grid if you want. I wanted to kind of keep this a 9-chart grid. Then I've got the /ES, which is the S&P 500 futures. Then I've got /CL, which is the crude oil futures, /DX, which, by the way, you could also substitute with $DXY, the dollar index. I'm using the futures contract here. And then we've got /GC, which is gold. So we kind of have the Asian, European, U.S. energy, monetary, and alternative markets. Now, what we don't have in this grid, which we could add into this grid, would be something like cryptocurrencies, which I suppose we probably ought to, at some point, update this type of dashboard view, if you will, to include those. Now, if you're going to trade virtual currencies or virtual currency derivatives, recognize that there are some significant risks there. And since we're not going to go into those deeply, I'm not going to talk too much about it. But what I'm going to do is I'm going to maximize these cells. And we're just going to pop in here real quick. So the SPX this morning, this is the S&P 500 in the U.S. market as it started to open up here this morning. We get a little bit of a gap up and a little bit of a sell-off, or gap up and maybe stay right where it is. It's not driving higher at the moment, but we did have an overnight gap to the upside. And if we pop to the next one, let's kind of go in the rotation, and then I'll show you the hours of what we're looking at. So right now, the Asian markets are closed. And so we've had the influence from those Asian markets, and the influence from those Asian markets incorporating U.S. news from yesterday was a little bit of a hammer type candle. So the potential again for continuing this upward trend. And you can kind of see this move that's happening. I'm just going to zoom over here on the right-hand side. We're building into what Pat Mullally and I used to call a milquetoast ascending triangle. It's an ascending triangle that develops. I'll just draw off the tails here so you can see it clearly. But it's an ascending triangle that develops as kind of part of a bull flag type of pattern where you get a rally up, a pullback, and then it starts to kind of come up to this midpoint and bang its head on that resistance, creating the ascending triangle. But it's not pushing new highs yet. So it's got a little bit of room to move to the upside, but maybe not that full measurement perspective. That's why we refer to it as a milquetoast ascending triangle. It's not a kind of full potential ascending triangle in this particular case. Doesn't guarantee that it's not going to go higher, but it just says, hey, there's bullish momentum here, but there's some overhead resistance. That's kind of the perspective of that milquetoast ascending triangle. Taking a look at the Hang Seng, on the other hand, a little bit more bullish enthusiasm overnight in this exchange, in the China exchange, the Hong Kong exchange, and kind of breaking up above this previous resistance, but still, nonetheless, some resistance overhead. So not breaking out to new all-time highs or 52-week highs, but in this particular case, there is still some bullishness. So that bullishness in the Asian markets, generally bullishness in the Asian markets, translated perhaps into that bullishness that we might see next in the European markets, which came on board at about 3 a.m. this morning. And we get that, once again, a little bit of a gap, in this case, in the FTSE, a little bit of a gap. Well, actually, not even a gap up, just kind of a continuation candle and a little bit of a deliberation. And this is really kind of an interesting pattern. The cool thing about patterns like this, from a candlestick perspective, and I don't want to get too deep in this really quickly, but I just do want to highlight this because it's cool when you see this. If we were to take this candle and you were to kind of push this one over a little bit to right here, and you were to push this one over to right here, then you'd really have kind of one continuous candle that is really relatively unbroken by changes in momentum or changes in direction. You don't have any red candles, and you don't have any really gapping movements in that range. And so you can kind of squish those together. And what that would indicate then is we've got one big candle that looks like this, that's about that big. That's pretty darn bullish. Nevertheless, this last portion of the candle, now, again, that doesn't mean that it's going to go higher, but that last portion of the candle, a little bit smaller, that was trading right now. Now, here's the thing. This market is currently open as well from 9:30 Eastern time, just 5 minutes ago, 10 minutes ago, until about 11:30 a.m. Eastern time. There is overlap between the FTSE and the New York Stock Exchange, the SPX, and the U.S. markets. So this is still moving. So this is reflecting and reflective of what's going on here in U.S. markets. So this is kind of cool. The idea that we're maybe getting some movement in those European markets, but not so much. This is kind of, the feedback loop is back and forth for sure during this overlap time frame. So that would suggest perhaps a little bit of wait and see. Let's take a look at the German DAX. And the German DAX, a little bit more bullish perhaps even than the FTSE at this particular point, and moving higher, but off of its highs. So once again, suggesting that maybe there's a little bit of temperance to this bullish exuberance that we're seeing at least out of the gate on the German DAX. This long upper shadow kind of up around this range, if we were to draw kind of a resistance level, same kind of thing that we're seeing in all of these indexes kind of around the world. Some price discovery a little bit higher and then kind of falling back a little bit or coming off of that. We'll see if that continues throughout the day as we start to get into some of those earnings numbers. We start to get into some of the individual names that might be waffling a little bit or showing some performance. So let's pop here next to the S&P 500 future. So the futures overnight, and again, remember, this is measuring the market, not using the ES as a tradable instrument in this particular case. But look at those candles too. We could squish those candles together almost entirely and get a big bullish candle coming off of a hammer candle, but also running into a little bit of a resistance. So in that overnight time frame, this futures market is still moving as well, but that's influencing the S&P 500, the SPX, perhaps giving us that little bit of a spinning top or deliberation candle up at the top of that SPX chart here this morning as the market is getting up and moving. Taking a look, though, at crude oil futures and a big move to the downside in crude oil. A couple of things going on in the crude oil market here this morning. Number one, it's Wednesday, where normally we would get EIA numbers. We would get inventory numbers and things like that. Guess what? Guess what we're not getting, and we're probably not going to get. Even if we get a government shutdown relief later, it's going to take some time for that data to catch up. So we're doing this. The oil market is acting here without those inventory numbers. Now, obviously, there are private entities that provide alternatives to the government data. But the reality is, without that government data, this is acting kind of in a vacuum. Now, there are U.S. sanctions on Russian oil that could be weighing on this. Is an expectation that there is oversupply, but we're going into a big driving season when people have not been flying as much. So crude may be seeing a little bit of an oversupply issue here and pushing back down right from that diagonal trend line, almost as if the market understood technical analysis and where I drew that discretionarily drawn line. No, they don't behave according to that, but it just happens that it bounced down from that resistance level. All right, now let's take a look at the dollar. Now the dollar up a little bit here, and this is interesting. So remember, I said you can substitute here if you can't reach these dollar index futures, which trade on the ICE exchange. You could also use $DXY, as the dollar index, and you're going to see roughly the same thing. Okay, so /DX or $DXY, you're going to get the same thing. But over here on the right-hand side, the dollar kind of settling into a little bit of a support level at about the 99.37 level. And I'll tell you what, there was some bearishness here as we were starting to hear talk of 50-year mortgages, 15-year auto loans, and the idea of shifting the Fed balance sheet, which is essentially the end of quantitative tightening, shifting that Fed balance sheet out to the longer end of the curve, as the Fed has potentially indicated that they might do. That means perhaps that was the potential for some weakness in the US dollar, although we're starting to see a little bit of a bounce here, potential for a bounce. Now, the thing about the dollar is I think you've got to always put it into context. And people say, well, look at how low the dollar is. And it's been gaining a little bit of strength relative to where it was a year ago. Well, let's put that into some context here. Let's go back to a 3-year weekly chart and say, all right, where is the dollar relative to where it is? It's coming back up into this resistance level. So it is gaining some strength. It is not at the lowest that it has been. But I think when you start to put it in this particular perspective, you see that that dollar is still relatively weak relative to where it has been over the course of the last 3 years or so. I'm going to put that back on a 1-year chart, and we're going to pop right over here to gold. And here's the other thing I'm going to do really quickly on this one, and you can do this easily as well. Click on the flask icon right here. Come over and type in the word comparison, COMP comparison, and add a comparison line. And what I'm going to do is I'm going to add that comparison line. I'm going to show it first as a comparison to the S&P 500. Click on apply and OK. And you can see that there's been a fairly decent positive correlation between between gold and the S&P 500. It doesn't move in opposition. It doesn't move entirely in concordance as it is here at this particular point, although it does seem as if it is. But if we were to now change that comparison line from SPX, come over here to the gear icon, change that comparison line to, let's change that to the dollar /DX. And we'll click on OK and apply and OK. You can see generally the perspective is that dollar and gold kind of move in that oppositional method or manner. That when the dollar is getting weak, gold is moving higher because of that inflationary impact and because of the fact that gold is purported to be a safe haven. It is not a safe haven necessarily. It can move down. It can move on its own. When we say the word safe haven, you have to take that with a grain of salt in that perspective, that it is, yes, just because it has intrinsic value and it's fungible and it's divisible, it doesn't mean that it is safe, that it is without risk. But you can now see that it's kind of come back into concordance with the dollar. So the dollar moving up, gold moving up, which would suggest that maybe there's another reason why gold might be moving higher. Gold in and of itself kind of becoming its own trade. 1, 2, gold kind of moving in that perspective to the upside because of sovereign buying of gold, for instance. We're getting into that holiday season in the Asian markets where gold might be being bought by sovereigns and by individuals to bolster those performances, kind of that non-bank bank type perspective. But not really kind of seeing this as that alternative. And there's also an argument here as well when you start talking about cryptocurrency. So I know it was in our disclosures at the beginning. I'm just going to say this again. Trading virtual currencies or virtual currency derivatives entails substantial risk. Make sure that you understand that trading those alternatives, trading virtual currency derivatives or virtual currencies themselves, these represent a storehouse of value, but they are not legal tender. So I just want to make sure that we're aware and clear on that disclosure before I do this. So I'm going to go here, and I'm going to go click on the Flask icon. We're going to come down here to the comparison line. I'm going to click on the gear, and I'm going to go /BTC, Bitcoin. This is the Bitcoin futures contract. Again, we're not using this as a market measure and not as a tradable instrument. So I'm going to click on OK and apply and OK. And you can see that gold and Bitcoin have been tracking fairly closely to one another, if not to the same magnitude and the same cyclical frequency, but more in concordance than in opposition to one another. And you can kind of see that relationship here. Okay. All right. So I'm going to say two things. One, there's a feedback survey out there in the chat, and I would love to have your feedback to do this. As we talk about these things, as we talk about different ideas, I want to hear what you think about the discussion, because we always try to make these webcasts better. We try to make these better for you. So 2 questions. Let us know. Again, 10's great. 1, you hated it. And then there's a feedback question. So fill in those feedback questions, because we read every single one of them. Now, second thing I'm going to say is, if you really want to get into a deeper dive to this, click on that Flask icon right here, and we can add a correlation. So I'm just going to type in the word correlation, double click on correlation, and since our base is gold, I'm going to come here to the gear icon once again. I'm going to change this to /BTC, enter. Whoops, let's just make that the continuous contract, /BTC, enter, click on OK, apply, and OK. Now, positive correlation is above 0, negative correlation or inverse correlation is below 0, and you can see that this kind of splits the bill. This spends neither more time above nor more time below, so it's not really a kind of a coordinated correlation. So that's kind of interesting in terms of that. At the moment, a little bit of correlated or concordance, but it has been an inverse relationship previously as well. So you can keep that on your chart if you want as a study. I like to put it on there, and then you can turn it on and turn it off with the little eyeball. So we'll keep that on there, applying OK, and it's there. Same thing with this study, the comparison line study. You can keep that on that chart. And then what you can do is you can save this as a study set. And, this is kind of cool. Click right here where it says Save as Set. I'm going to call this our Trader Talks study set. Trader Talks studies. And I'm going to click on Save. Now I can come back and I can apply this whole set of studies to the chart whenever I want to, and click on OK. And now we're done. We can come back and we can apply those, and we've got them. And I can put them on the other charts as well. All right, so that's our around the world view. A couple of other things that I want to get to. Then we'll jump into some individual names. Oh, the first thing I promised that I would tell you about this. Let me come back to this grid. I'm going to come over here on the left-hand side. And again, for those of you that were here with me last night, yes, I will share it. Thank you. I thank you for reminding me. I'm going to go ahead and share it. We'll share the grid. And I will put this in the description of the webcast as well. Remember, anytime we share anything, it is for illustrative and educational purposes only, not guaranteed for time or accuracy. But over here on the left-hand side, my scratch pad, the Tokyo Exchange opened from 8 p.m. Eastern time to 2 a.m. Eastern time. The Hong Kong Exchange, 8:30 p.m. Eastern to 3 a.m. Eastern the next day. London is open 3 a.m. to 11:30 a.m. The DAX, 3 a.m. to 5 p.m. because they take a little bit of a break during the middle of the day, kind of like the French, I suppose. And then the U.S. market, obviously, 9:30 a.m. to 4 p.m. Eastern time. So there is that overlap between 9:30 and 11:30 when the U.S. markets, the UK markets, and the German markets, and by the way, also the French market, open at the same time. So there's that overlap during that time frame. So you can see what's going on. All right, so I've shared that with you. Let's pop over here. I wanted to look really quickly at what's going on with volatility. We'll go to the VIX grid. And the VIX grid, starting to see volatility, the volatility of volatility increasing a little bit, but the VIX popping just up a little bit, which is interesting. Because if we've got, let's go to this next one here. We've got the VIX up and the market up slightly on the day. And that's interesting. That oftentimes, VIX up, market up, oftentimes can suggest kind of a risk on perspective, because there's some buying typically then of call options to speculate or take advantage of upward movement. Doesn't always mean that. And it's not a positive relationship. I mean, it's not necessarily a long-term positive relationship. When you get the VIX up a little bit, and again, we're still early. I mean, we're not even half an hour old. But when you start to see that movement happening, that can be an indication of potentially some risk on or bullishness, to be fair. All right, let's take a look at some of the individual stocks here that have been moving. We've had a couple of earnings that have happened. So let's pop over here really quickly. I'm going to bring this to my single grid, which is just kind of my playground for individual stocks. Let's take a look at some of those individual names. CSCO, Cisco, post their earnings announcement here. We've got that earnings announcement right down here in the bottom corner. So that is after the market closed today. So expected movement here. And I grabbed the wrong one, but starting to see a little bit of a lift here, potentially some anticipation of, I'm going to pop on this chart one other thing, implied volatility, so that we can kind of see what's going on in that expectation. Implied volatility relatively high going into this earnings announcement, so some expectation of movement. The other one that I wanted to look at here that came this morning was On. This is On Holdings. I talked about this on the Schwab Network yesterday morning with Diane King Hall. Schwab Network brought to us by our media affiliate, Charles Schwab Media Productions. Big gap up to the upside on Holdings, and breaking above this kind of confluence of support and resistance here, this diagonal resistance level, the support level that it had been building around the 4130, and starting to move up just a little bit here. Gap up and rally, but not really a big rally, kind of a long-legged doji at the moment, kind of sitting back here. Implied volatility falling on that earnings announcement. Let's see what the earnings announcement did. So estimate was 19.5. Actual was a big beat at 53 cents, which led to the gap up potentially. What now happens remains to be seen. Let's take a look at a couple of others that are in this particular space, having reported this morning as well. CRCL, and we kind of see that little bit of a gap down here. We've got a couple of others that are coming up that may be important to pay attention to. KLC, KinderCare. We've got also Serve. This is a robotics company that's coming up with earnings tonight as well. Now, here's one that we maybe want to pay attention to, just from the standpoint that it gives us a read on streamers and the communication services space. And that's coming Thursday morning, tomorrow morning. And that is this one right here. And you can start to see this particular, whoops, I don't know, where did we go there? Let's go right here, DIS. Okay, there it is. You can start to see that little bit of a basing pattern that this is built, some bullishness coming into that pattern. We've got the earnings announcement right ahead, and implied volatility is already starting to fall. So you start to look at where traders might be paying attention to levels of support and resistance. We see that little bit of a breakout here of that move to the upside. A couple of other things that are going on this morning as we start to see upgrades and downgrades. So there are some upgrades afoot. There are some downgrades afoot. The one that I wanted to look at here really quickly from a perspective of movement is this one, MSFT, Microsoft. And we'll look at this in the context of their involvement with NVIDIA. So some news going back and forth here on this particular stock. And by the way, you can find live news about a particular symbol. If you come over here to the left-hand side in your gadgets and you switch your gadget to live news. Now, again, this is going to give you a variety of different news sources. These are not guaranteed. These are third-party providers of that information, but let's put in here MSFT. And this is where you're going to start to see any news stories that happen to have a mention of this particular symbol, whatever symbol that you put in there. And so you're going to see those news stories as they start to roll through. And again, AI and power are going to be the big themes here for Microsoft. But that's one way that you can see that live news information. So Microsoft kind of running up into this resistance level here and kind of banging its head. Implied volatility low and potentially turning around and rising here after that earnings announcement. Let's take a look at the other side of this news story. NVDA, which is NVIDIA, which is one that a lot of traders potentially may be looking at just ahead of this particular earnings announcement coming up on the 19th. That is next week. And starting to see these kind of bigger bearish candles, a little bit of a bearish engulfing candle, a gap up and a sell-off type of candle here. So looking for possibly a level of support to be held in this particular case, right about here. And implied volatility high and still rising into that earnings announcement. You know, we've got a couple of others that are in this mix as well. Let's take a look at, you know, just in the AI space, GOOGL. And post the earnings announcement, starting to see a little bit of a bearish movement here. And again, let's kind of put this into the context. Because you see this bearish engulfing candle this morning, and I think what tends to happen is people get myopic, right? Traders tend to just see this part of the equation and say, oh, it's a bearish engulfing. It's got to be coming down. Without looking at the trees and the forest and saying, look, this has a longer term. If we were to put one of those moving averages on here, put two of those moving averages on here, the 50-period moving average is strongly higher. The 200-period moving average is strongly higher here. This is maybe at best pulling back into, say, for instance, a 5-day moving average. And it's run into a resistance level. So it's, in fact, building a little bit of an ascending triangle here. We could probably argue that the ascending triangle looks a little bit like this, and we're in that downside of that ascending triangle. This is not, however, a milquetoast ascending triangle. This is one of those ascending triangles that has some bullish potential to it. Not a guarantee by any means, but it definitely has that idea that from this particular pattern, from a technical analysis, this is not me, but from a technical analysis perspective, when we see price squeezing in between a level of support and a level of resistance that are getting closer together, there is that potential for that move to the outside in the direction of the trend coming into the pattern. The problem is, and as we look at a pattern like this, let me kind of squish this down just a little bit. From a technical analysis pattern, by the way, speaking of technical analysis, if you have not been to one of Rachel Deshell's webcasts, I think she teaches long options and a couple of others. Rachel, along with Connie Hill, are both CMTs, chartered market technicians, and she's got some great ways of discussing technical analysis, as does Barbara Armstrong, as do all of the coaches. But if you haven't joined one of Rachel's webcasts, I would highly encourage you to do that. And we've had this conversation before, but in technical analysis, especially when you see a pattern like this, the deeper you get into this apex of the triangle, the more likely it is that this pattern fails, and fails in the opposite direction that it's expected to go. So you start to see this trend coming in that's an upward trend, and the expectation is pop to the upside. But the deeper it gets into this, what's sometimes referred to as a coffin corner, the more likely it is for this price to fall out the bottom of that pattern. I'm not saying that's what it's going to do. I'm just saying this is what technical analysis suggests. The deeper we get into that pattern, the more likely it is to fall out the bottom of that pattern and for that pattern to fail. But the ultimate idea here is that if this is the length of our pattern, we'll just kind of draw this in, right? And here's the apex. That the breakout theoretically should occur somewhere between about 2/3 and about 3/4 of the length down that triangle. So we're kind of now, unless this reverses, we're kind of now outside of that target range for this to make that move to the outside or to the upside. Could it still do it? Absolutely. But we're now kind of into the coffin corner here, where there is a greater potential from a technical analysis perspective for this to make that move to the downside. So now investors might be thinking, well, if this doesn't break out, where does it go? Does it pull back and make that move to the downside? And yeah, there's a lot of different ways that we can look at this in terms of different technical studies. Jim, you're right. We could put on Bollinger Bands, which would indicate if implied volatility is relatively low, those Bollinger Bands are probably squeezed pretty tight. And the thing about volatility, let me kind of zoom back out of this because I made a bunch of adjustments on this chart so that you can see it. I'm going to go back to auto and I'm going to zoom back out so that you can see that because it's wider than it was looking there. But when implied volatility is relatively low and price is getting squeezed, it's very likely that those Bollinger Bands are coming back down and getting squeezed as well. And when they squeeze, they oftentimes pop to the upside. And so they're or to the downside. And so we could see kind of that squeeze and pop in Google here. All right, let's take a look at a couple of others really quickly that I wanted to look at. AMD was one that was in the news yesterday. And this is one that I kind of wanted to come to and look for some continuation as we see that same kind of pattern. So remember what we said about the kind of the Hang Seng market, the Hong Kong market. That has perhaps a lot to do here with what's going on with AMD. We see that little bit of a gap up. This is looking very, very similar to that market as well. And we see this kind of potential breakout. So what I'm going to do really quick, I'm going to pop down here to a 5-day, 5-minute chart. So we're going to click on the time frame. We're going to go down to a 5-day, 5-minute chart. I'm going to zoom over here to the right-hand side. So what I want to look at is the high of the first 30 minutes. Now, this is an old intraday trading method. And intraday trading, again, recognizes that you have a greater likelihood of short-term signals and the greater likelihood of signals that are just noise and not signals. So what I'm going to look for here, and this is something that we've talked a little bit about before, but I'm looking for the high of the first 30 minutes. So I'm going to zoom in. We're just about at that first 30 minutes. In fact, we're just past that first 30 minutes. So where's the high of the first 30 minutes? It's right here off of that 258.67. So you know what I'm going to do? I'm going to draw a line right there. And I'm going to say, look, if I'm going to enter this trade, even if I'm going to enter this in a bullish trend trade without a target overhead, and we're just going to look at getting into the trade, I'm going to use that as my line in the sand, my Rubicon for this stock to cross in order to enter the trade because it's broken above the high of the first 30 minutes. It's gotten out of that volatility range. First 30 minutes of the day typically tend to be fairly volatile, especially for technology stocks recently. So if it can get out of its own way in that first 30 minutes, I'm going to right click. I'm going to create an order that is a buy custom with stop because I'm going to treat this as a trend trade, not a swing trade. And I'm going to make this a buy stop order. And so I'm going to say, all right, here's our level right here, 258.70. I'm going to call it 258.70. And this is going to say, stop, wait. Don't do anything until price breaks that high of the first 30 minutes. Then enter the trade, else wait. And then if it does break that and we do get in, I want to get out if it goes below the low of the day or the low of the first 30 minutes, which in this case is 250. I'm going to make that 250. Actually, what I'm going to do to be a little bit odd is I'm going to make that 249.93, just so that it's a little bit different. It's not a round number. And I'm going to make that good till canceled. And I'm going to click on confirm and send and read through this order, make sure that this order is what I want it to do. And I'm going to put this back in our market movers group. And I'm going to send this off. And you notice what's happening here. That next candle is running into that resistance, the high of the first 30 days. Now we got that move above. Sorry, not the first 30 days, the high of the first 30 minutes. Now we got the break above. We're into the trade. We've got our stop in place. And that served as our trigger. And you can start to see where the momentum is going here, right? This candle, once it broke above that resistance, has now started to see that momentum. It doesn't guarantee that it'll continue, but it is moving in that particular direction. So that's an example of using kind of an intraday signal. I'm not talking about quote unquote day trading. I'm talking about using an intraday signal as a means to time an entry. Now, are you refining that beyond just saying, look, if we go back to a 1-year daily chart and saying, look, do I have a breakout of a resistance level? Yeah, I do. The candle is breaking out, but we're refining that entry timing just a little bit more in that particular case. All right, we got a couple of minutes left. I wanted to do this just to follow up on something that I talked about yesterday on X, and I posted this video on X and on LinkedIn. By the way, you can follow me on LinkedIn as well now. And oh, speaking of following, there's that feedback survey out there. Just a quick reminder of that. But I want to take a look at this one, NFLX, Netflix. And I talked about this yesterday in a short video that I posted, and that is this upcoming stock split, which is coming up on the 17th, which is next Monday. 10-for-1 stock split. And I talked about the idea of a split being really full of sound and fury, but indicating nothing, because a lot of people talk about it. It gets a lot of people's attention, but net, it is really equivalent, right? So if the price of the stock, let's say the price of the stock right now was, where are we? 1138. Let's take our calculator over here. Let's change our gadget once again to our calculator. So if the price right now, if this were happening right now, we were at 1138, we would just take 1138 and divide it by 10, because this is a 10-for-1 forward split, and each share would be worth $113.80. Now, what would also happen is that option strike prices and premiums would adjust, but that takes a little bit of time, would adjust for that split. And the presumption is, in this move, is that you're going to see a post-split depression, that once the split happens, once it starts trading at the split-adjusted price, that investors start to sell off some of those shares. Now, you know, the value, the shareholder value is the same, right? If you've got one share, you're now going to have 10, but at a tenth of the price. The presumption is that the price continues to move higher. At the same time, when it does that, if a percentage move, you're not getting anything out of this. Now, there is one thought about splits like this, and that is when you have a stock that's trading at $1,138 a share, that's maybe less accessible for investors, especially retail investors, than $113. So it may increase trading volume because it becomes more accessible. So there may be more activity. So that's maybe one potential, I don't know if it's an advantage or not, but one potential result of a stock split. Otherwise, it typically tends to be relatively neutral, right? So you have to buy by that's the date of record, says C. Larson. Yeah, by the end of the 10th. So there we go. All right. Yeah, I like that. After the split options might be in the snack bracket for Barb's class. Barb teaches trading a smaller account, that webcast is a great resource. By the way, speaking of great resources, come on over here to the Trader Talks webcast page. If you have not done so already, click on subscribe, and you can do this, trading a smaller account. And you can find Barb's webcast right here, her playlist of her trading a smaller account webcast, where she talks about a variety of different subjects and some information there. So some great resources here. When you come here, just please click on that subscribe if you haven't done so already. Follow us on X at Ben Watson CS, at Barb Armstrong CS. And again, fill out that feedback survey. And if you want to join us for any of our live events, come right here to the Schwab coaching page, go to in-person events, and you can see the full schedule, even over the horizon in the next year, of our events that are our live events that are coming up. Barb's going to be there. I'm going to be there. Kevin Horner is going to be there. Thanks, everybody, for being here this morning. I will put that link to the grid in the description of the page. Have a great day. Go out there and enjoy the market. We will see you again very soon. Take care, everybody. Bye-bye.